So there is a massive opportunity for Tesla stock and the overall market as well. For example, last night in the Push and Profit private group, I called out a trade for Microsoft where I said, in particularly, I'm looking to short for a scalp trade once we see Microsoft above $334.30. Now, the next day after I made that call out, Microsoft ended up falling down a tremendous amount. And if you would have gotten put options for Microsoft after that call out, you would have made 1,200% in just one day.
That is wild, isn't it? Just wild.
Now, this call out was based off a lot of the bearish activity I was seeing in the options chain, but I also want to go ahead and highlight what's going on with Tesla stock as well, because as I mentioned in the beginning of the video, there is a ton of opportunity. Now, in the pre-market, we saw that Tesla stock pushed up aggressively. However, after the open of the market, we started to see Tesla stock kind of start trending downwards towards the end of the day. Now, one of the things I mentioned in yesterday's YouTube video that I released was that there's going to be a lot of volatility in the market. Now, in this video, I'm not going to explain all the reasons why, because I think you should just watch that video to get a better understanding. But if you're already here, make sure to watch this video until its entirety and then possibly go back to that video. But I want to go ahead and cover some opportunities for Tesla stock. Now, while things are looking a little bit bearish for Tesla stock and the overall tech sector in general, one of the reasons why I am bullish for Tesla stock in the long term is simply based off the fundamentals of Tesla. For example, when we look into the profit margins for Tesla, we see that they have a 13% profit margin. However, when we take a look at what's going on with Ford, we see a completely different story. So one of the things I've been saying for a while now is that although we're having more and more auto legacy companies enter into the EV space, they simply do not have the infrastructure that Tesla has to price their vehicles at a lower price like Tesla and be competitive while still staying profitable. And so this is why we're seeing auto legacy companies like Ford lose billions and billions of dollars trying to get into the EV space, because they are actually losing money because of course they cannot price their EV vehicles at the same prices that Tesla can while staying profitable. Why? Well, they don't have the vertical integration that Tesla has, and of course they're way behind on the whole logistics and engineering that Tesla does with their in-house vehicles. Now, when we look at the PE ratios for Tesla, we see that Tesla is trading at a high multiple of 63 times its earnings. However, what this tells you is that investors are optimistic for Tesla because they know that Tesla has a potential where they're willing to put way more money into Tesla, more than what it's currently earning, simply because they know that Tesla is going to be earning much more in the future. For example, when you take a look at the PE ratios for Toyota, you see that it is not trading at a multiple that Tesla is trading, and that kind of tells you that investors are not as optimistic in Toyota as they are for Tesla. Now, some folks may argue that when you're looking at the fundamentals and you see a company like Tesla with a high PE ratio, that simply means that the stock is overpriced. However, we have to remember that we are in high interest rate times, and typically when you're in high interest rate times, PE ratios tend to contract. So they're not as high as they once were back in 2020 and 2021 when we had a low interest rate era, right? So obviously multiples have contracted, but we still see, multiple or investors pouring money into Tesla and willing to pay these high multiples. Why? Because they're optimistic. So with that being said, this provides us with a massive opportunity for Tesla, because guess what? If we expect some volatility coming in the short term for Tesla, but at the same time, we know that Tesla is very strong and robust fundamentally, well, this provides us with a massive opportunity, because let's say Tesla does experience some volatility for a various amounts of reasoning and ends up coming down a bit. Well, if you're a long-term investor for Tesla, meaning you have exposure to Tesla in your long-term portfolio, you can simply just scoop up more shares of Tesla once we, have that dip and simply just dollar cost average. It's very simple and effective, right? It's proven. You're not even timing the market. You're just having time in the market, and you know that you're buying a company that fundamentally all the other competitors can't even compete with. Now, if you're someone that trades Tesla, right, now this is a completely different type of vehicle. Again, investing and trading are two separate vehicles that you're going to want to have separate approaches. So for me, I do have exposure to Tesla in my long-term portfolio, but I also trade Tesla in my short-term trading account. So I trade the ups and downs in Tesla, but I don't do that much movement in my long-term portfolio. So for your short-term, time frame, for people that are looking to trade Tesla, well, if there's expected volatility coming into the market, again, I'm not going to explain the reasoning why, because I said that in yesterday's yesterday's video. So when you're done watching this video, I'm going to point you guys to yesterday's video, but that could possibly lead to opportunities to short Tesla and then swing trade Tesla, or day trade Tesla, whatever your time frame is for trading, into a long-term trade. Because guess what? If we see Tesla come down, well, once we start seeing Tesla go up, I want to show you guys this level right over here. For example, if we see Tesla go down and then go back up to this level of $250 per share, well, there is little volume by price around this area. Now, volume by price is different from your traditional volume by time. So when there's low volume by price, that means that there's not a lot of competition, or there's not a lot of battling between the bid and the ask. And so that means when there's a stock trading in one direction, and there's a lot of bids coming in, a lot of buying orders, well, that's going to fill the order book up, and we're going to see the stock go up. Vice versa, if a stock was going down around this area, well, that means that there's just a lot of selling going on, and it fill the order book and go straight down. For example, when we see this level right over here in the past, back in October of 2022, we see this big candlestick going down. Why? Well, obviously there's other various reasons why, but if we just look at it from a technical standpoint, we see that there was little volume by price in this area, so selling really just broke down the order books, and we saw a massive sell down. And so what I'm saying is that in the short term, if we could expect, maybe if there's volatility coming in, Tesla may fall down. If you want to short that and trade that, cool. But once Tesla bounces back up, well, once we go to this area, there's a massive opportunity for an uptrend. So there you have it, guys. We talked about Tesla from a short-term aggregation period and as well as a long-term horizon. So obviously you guys approach Tesla with whatever approach you guys are doing, and only trade in whatever you see value in. But hopefully this video did help you out. We covered some things from a technical standpoint, also from a fundamental standpoint. In this video, I didn't really highlight too much of the economic data that we're seeing. That was in yesterday's video. Again, I'm going to recommend you guys to that video, but also this is the reason why when it comes to trading and investing, I look at several different data points. I try to have a holistic approach. I don't just look at just technical analysis or fundamental analysis or just monetary policy or fiscal. I look at everything: fiscal policy, alternative data. And so this is why I'm able to go ahead and really see what's really going on for the market, because I have a better pulse simply because I'm looking at things from multiple data points. Of course, I may be wrong. It's multiple times. I'm not going to be forever right all the time. I don't have a crystal ball, and whoever tells you that they have a crystal ball, well, you should probably run from them, right? But all I'm trying to say in this video is that when you look at things from multiple different directions, you get a better understanding of what's going on. So hopefully this video helped you out. Make sure to also subscribe to the channel if you haven't done so already. And again, if you missed out on yesterday's video, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.